Hello and welcome to Chapter 4. This is going to be Lesson 1, Preparing a Chart of Accounts. So Techno Consulting records all their transactions in a journal. That's what we did in Chapter 3. And the journal is your permanent record of all the debit and credit parts of each transaction, and they're recorded in chronological order or by date. However, the journal doesn't show in one place all the changes to a single account. So, for example, if I wanted to know how much we had bought in supplies for the month, I would have to go down through my journal looking for every transaction that involves supplies. This is not very useful. So instead, accountants will use a form to summarize it all in one place, everything that happens to a single account. And you have a separate form for each account. So I'm going to give you a couple vocabulary words. This is not in the same order as your chapter, so don't get lost. First of all, a ledger. A ledger is just a group of accounts. And each ledger will contain pages. Every page, it represents a separate account. A general ledger is the ledger that contains all accounts needed to prepare the financial statements. There are some other kinds of ledgers, but for right now, all we need to be concerned with is the general ledger. Everything we're going to need to prepare our financial statements at the end of our fiscal period will be found in our general ledger. Account number, that is simply the number assigned to the account, and the account name is the name given to the account. So let's go ahead and take a look at a ledger form. Here is a ledger form. This is just like what's in your book. And we're going to use this to record everything that happens to one type of account. Okay? Basically, this half here is what we have been using. This represents exactly almost like what you had on your journal or on your T account. So if this was cash, we would have the date, and then we would have it either the debit or the credit column. This represents just your T account. But this still wouldn't tell us how much cash we had. And so we have developed the form to show two more columns called the balance columns. And the balance is either the debit or the credit. Do you remember back from Chapter 1 or 2 where we were learning which side increased and which side decreased? And we also learned which side was normal. Okay, the normal side is always your increase side. But the normal side we need to know because here is where we're going to use it. Cash increases as a debit. Cash's normal balance is a debit. That means that you should always have your balance in your debit column. If you have a balance in the credit column, that means that we are in the hole, that we are out of cash. So the balance is basically how much money do you have right now? At any time you could look at this and you could see. So cash is an easy one because it's just like your balance in your checkbook. We need to know how much money we have in the bank from what we've deposited and what we have spent. It may also be called a balance ruled account because it does have balance columns. Okay. This is our chart of accounts for Techno Consulting, and this is in your book. You can find it on page 2, so everything that we use is going to be represented in here. We've got our cash, our accounts receivable, supplies, prepaid insurance, liabilities, owner's equity. And then over here we have our sales and all of our expenses. So these are the only accounts that we are using up to this point. There is a few others listed here. So to prepare a chart of accounts, somebody had to put these accounts in, and sometimes you have a new account come. So Techno uses what's called a 3-digit account number. So cash is 110. Petty cash is 120, accounts receivable 130. And it is divided between the asset section, liability section, owner's equity, revenue, and expenses. I'm going to highlight that. And with each one of those categories, it is numbered separately. So every asset is going to start with a 1. It's in the 100 group. Every liability will start with a 2. All the owner's equities are going to start with a 3. Now we've got owner's equity, and then we've got revenue and expenses. So we're going to break those out separately now. So owner's equity included our capital and our drawing and another account called income summary, which we've not dealt with yet. Revenue, any kind of revenue is going to be a 4, and revenue is how we brought in money. So typically that's going to be sales. Some companies will break it out. Was it sales of outdoor equipment? Was it sales of clothing? What was the sales of? Maybe it was online sales. And then expenses will always start with a 5, and that's where we're going to list all of our expenses. Account numbers are assigned by 10s so that new accounts can be added, because sometimes you need to add a new account. The procedure for arranging the accounts in the general ledger, assigning the account numbers, and keeping the records current is called file maintenance. And I'm looking to see if I've got a sheet with that. I don't. Okay, so file maintenance is a vocabulary word. Okay, so file maintenance is the procedure for arranging accounts in the general ledger, assigning account numbers, and keeping the records current. So like I showed before, the first digit is going to represent the general ledger division, and the second 2 digits are going to represent the location within that general ledger division.